The easiest way to determine whether or not you can afford to buy an apartment in New York City is to use Hauseit's Home Affordability Calculator, which is available at www.hauseit.com. How much apartment you can afford depends on your annual income, how much you've saved, and the estimated monthly carrying cost of your dream apartment, among other factors. Home affordability in New York City also varies between condos and co-ops, since they have different closing costs and financial requirements. While co-op apartments are usually the most affordable in terms of price, they're not always the easiest to qualify for financially. This is because most co-ops impose strict financial requirements on applicants as part of the co-op board approval process. So, how much co-op can I afford in New York City? Co-op apartments are almost always less expensive than condos. However, co-ops typically require a down payment of at least 20%. Furthermore, the income requirements for co-ops are generally stricter than the underwriting standards of major lending institutions. While most banks will loan up to a 43% debt-to-income ratio, co-ops in New York City typically require applicants to have a debt-to-income ratio of 25% to 30%. The stricter debt-to-income requirements of some co-ops have a drastic effect on your maximum theoretical purchase price in New York City. Here's an example we computed using Hauseit's Mortgage Affordability Calculator. Based on a $150,000 annual income, a $1,000 estimated monthly maintenance, and a 30-year loan with a 5% interest rate and 20% down, the maximum purchase price is $999,000 at 43% debt to income, compared to just $475,000 at a 25% debt to income ratio. In the example above, the difference between how much apartment you can afford in the case of a condo compared to a co-op with strict income requirements is over $500,000. This means you'd be able to buy a condo which is approximately twice the price of a comparable co-op apartment, excluding closing cost implications. How much condo can I afford in New York City? While condos are more expensive than co-op apartments, they may actually be more affordable since it's possible to put less money down and have a lower income compared to co-ops. On the flip side, buyer closing costs for condos are on average 2% higher than for co-op apartments. This means that some of the lower down payment requirements for a condo is offset by the fact that you need more cash for condo closing costs. Buying a condo also has other benefits, such as a more flexible sublet policy and fewer overall restrictions on how you can use your own apartment. If you can manage with the smaller space of a condo and don't foresee the need to sell prematurely in order to upsize, then it's probably best to opt for a condo. If you need maximum space and do not foresee moving out of New York City or renting your apartment, then a co-op is your best option. Thinking of buying or selling in New York City? Save money with Hauseit, New York City's largest and most trusted for-sale by owner and buyer closing credit company. Hauseit has saved New Yorkers millions of dollars in commissions since 2014, and we'd love to help you too. Subscribe to our channel and check us out at www.hauseit.com.